Good evening. Thank you for taking the time to listen to the relevant presentations tonight. My name is Cathal Friel. I'm Executive Chairman and Co-founder of Orphan PLC. I'll probably go through some of this presentation reasonably quickly, given that I think a lot of people maybe are familiar with it, but for those who are not familiar, let me just take a very high-level summary. The company is put together. We IPO'd in June last year at 5.7p. We acquired Venn Life Science, and the model would be to put a small amount of struggling AIM-listed companies together pretty quickly, turn them around, make sure they're no longer struggling, take out the losses, make them profitable, and build a niche CRO. The team here is quite small. We intend keeping it small, because I believe a small cap pharma company on AIM, pharma services, doesn't need a large, elaborate team. Everybody involved has been around the block quite a few times and have done this before. We're probably one of the more heavily invested management team. I personally have 2.5 million my own cash in, and collectively the management team still have close on 20%, and we're locked up for 3 years from June last year. So there's nobody in the management team selling anytime soon. My prior experience was I've got Amrit Pharma together, co-founded with Joe Wiley. Amrit did 150 million in revenues last year, and today has an EV in the region of 500 million. So this is my second pharma. This time it's purely pharma services. What have we got here? Basically, having put Venn Life Science and hVIVO together, we now have a niche CRO. What's a CRO? As a clinical research business. It's growing and expects to be profitable very soon, more or less there. It's a high margin pharma services business with a broad customer base, including global pharma. And more importantly, with numerous, I'd say, new revenue streams, and with a substantially and rapidly growing pipeline. What do we really do? It's basically hVIVO, and hVIVO is quite unique. We acquired it in January when we were struggling and loss making, but hVIVO in January, the world didn't really care. But as I said, the first line, it was and still is the world leader in the testing vaccines, antiviral, and respiratory disease medication. It's run from a unique 24-bed quarantine clinic in East London. It's the only one in the world. 25 million replacement cost. It has its own on-site viral laboratory, 10 million spent on that replacement cost. And a portfolio of challenge studies in the region. These are valued at 25 million replacement cost. And really importantly, not alone have we now a traditional CRO clinical trial business testing vaccines, we also have a very exciting COVID-19 vaccine testing business, and more of that in a minute. The same way a year ago, we acquired Venn Life Science. It's more niche. It's basically a pharma consulting company, and it does CMC, that's chemistry, manufacturing, control. That's how you make the drug. Preclinical, PK, pharmacokinetics, how the drug works in you. And it had 6 offices. We got rid of 8. We got rid of 6 of them as part of the slimming down. But really importantly, both companies are over 25 years in business, and it would take a long time to build up this customer base. Just look at that customer base on the bottom of page 5 here. Janssen, which is part of Johnson & Johnson. You have Boehringer Ingelheim, third biggest German pharma company. Ipsen, one of the larger, and Servier, the larger French pharma companies. Merck, Gilead, loads of these companies who are all involved in the vaccine business at the moment. Even DARPA, the American defense researcher, all of these are existing and ongoing customers of hVIVO or Venn Life Science. So, quick snapshot of what we have. We're listed in AIM. We have 664 million shares. Market cap on June, we updated that 77 million. It's a little bit higher now. It's 86. We've cash in the balance sheet of 15.5, and we've net debt of 1.4. Revenue last year of 24 million, and basically both companies were loss-making last year. We will certainly not be loss-making as we now move in going forward. Our primary office is in London. We've also another office in Paris and one in Breda in the Netherlands. And say myself and my co-founders, we're the largest shareholder in the region of 20%, and we're locked up from 3 years from June last year. Invesco is our second largest, and our largest is 7.91. And we raised 12 million at the end of May, and that was exclusively in all institutions. And I know there's a bit of an overhang at the moment from our Woodford stake, but all of those institutions have made it very clear they're sitting tight and they're really happy with the progress where we're going. I know some of investors would love to see our share price shoot up 20 or 30%. Let's try and do that over a month or two. And we have a lot of news flow coming up. Let me talk you more on that. But I think having gone from 5.7 last year, doubling and tripling revenues and building it up now to touching 13p is not too bad going in a company that's quite low risk, and I would say very low risk, and it's more upside in that we have now very substantial revenues, and we're not in the drug discovery business, we're in the drug services, i.e. the picks and shovels. We don't care and we don't mind if the drug fails, we always get paid and we get paid in full. So we're building what we're trying to say as a very steady, safe, growing AIM pharma services company. Since the merger in January, I say we put two businesses together, the Venn business hVIVO. We said we'd integrate them, we'd reduce the cost base, we'd expand the laboratory services, and we'd convert their contracts and get profitable. I think we've done all of that and more. We took 2 million of the hVIVO cost base, 3 million of the Venn cost base, and our forward 2 to 3 million will be out by 2020. We are in the profitability as we speak. We've right-sized the management team, and we've combined the CEO and our senior roles. And really what I'm saying in these companies, the beauty about them, I know some people worried when we slash and burn, but bear in mind these are pharma services company with a lot of highly paid, very professional staff there a long time. There's been a lot of helicopter staff, executives come and go. And what we've done, we've really made the department line managers, the frontline staff, effective and given them the responsibility to run their own departments. There's no need for, I say, the COO, CEO, and loads of these C-suites. We are niche, we're small, and I believe that that's a better way. We call right-size the management team. And give an example, we reduced Venn staff by 1/3. We got rid of 6 offices, and you'll see in recent months we've actually been announcing substantial contract wins by the Venn staff. So that goes to show you, having this extra layer of bureaucracy in small pharma services company, it gets in the way of the fee earners. I'm not going to dwell on the bottom line other than, look, we've said on a monthly basis we will announce contracts, and let me come to those now in a couple of minutes. What is the challenge study business? For any of you who don't know, it's very simple. It's a form of clinical trial, and basically why hVIVO is so unique is they're one of only 2 pharma services company in the world who do this. And basically what we do, the normal clinical trial, you give sick people a new experimental drug and you try and make them well. And that clinical trial you test, does the drug work? In the challenge study business, we take healthy people and we inoculate them with a vaccine a month out. And then 1 month later, we take them in to our clinic. And what's unique about it, we make healthy people unwell for a couple of days to test, does these vaccines work? By giving them a mild version of the virus. And that we built a very nice, steady, mainly RSV vaccines, testing influenza vaccines. But the big one, the center of page 8, is where the real action is. This company had been lumbering along, it got lost its way, hVIVO. It was trying to develop its own vaccines and do services. We've stopped all that. We're sticking to basically the development of the pharma services, the clinical trials. And really, we're very much a non-COVID business. I'll come to that in a minute, but we also the COVID-19 opportunity is basically, there's well over 100. As of today, there are 179 COVID-19 vaccines developed around the world. There's 12, that's increasing now, it's probably closer to 20 real ones, and over half of them are in discussions with us. And watch this space as we come in over the next month or two. You will see some exciting updates, announcements on these clinical trials for COVID-19. Bottom right-hand corner, it's an unprecedented growth opportunity for somebody like us. But the beauty about it, not alone as a growth opportunity, this is one of the few times myself and the rest of the team can look back and say, wow, we've done something for humanity. It's quite exciting going into work these days thinking, wow, we are speeding up the delivery of vaccines for COVID-19. And we've even announced our first COVID-19 trial delivery in this past week. And again, I'll come to that in a moment. I'm not going to dwell on page 9. That's exactly how the COVID challenge study model works. It's how you bring a healthy person in, you inoculate them beforehand, you give them a small version of the virus, and you see, does the vaccine protect them or not? So it's exciting. Very importantly, when you take over these small AIM-listed companies, particularly, we've got a large stake. We value our own cash equally as well. We value all our investors' cash. So we want to get other revenue sources. And we've basically, within hVIVO, we say our friend Neil Woodford invested 113 million real cash into hVIVO. We acquired it, all shares, in January for 13. That's 1/10 of invested capital. But if you see here, there's a 10 million laboratory, and we're pushing that and working on that to do two things: to do laboratory testing for lots of other third-party pharma companies and small biotechs. They don't have their own viral laboratory. There's only a handful of these laboratories in the UK. And we have to have an ability to test our challenge study candidates for both COVID and also for the antibodies. And we have that test equipment in. And in the last couple of months, we've made it available to third parties, and that is building up nice and steady. It's not going to work like the world on far, but it's a steady business. The antibody testing is now becoming a very sticky, continual revenues. And we're also doing COVID antigen test, that's PCR testing, again using the equipment we have in our laboratory. And yeah, so that's an exciting piece of work. So we have now revenue from our challenge studies, revenue from our clinical trials, revenue from our pharma services out of Paris, revenue from our pharma services out of Breda and Holland, and 2 laboratory services revenue, 1 from the antibody testing and 2 from the providing straightforward services to third-party pharma companies. So that gives us a really good cushion and framework to grow going forward. So the days of minimal revenue are long gone from this company. Don't forget, we started out last summer in a genomic database platform, and guess what? hVIVO have the world's largest database of disease progression of infectious diseases, and we're in the process of uploading that. But in the coming months, we are now going to have access to the Open Orphan, we call it data health database, and monetizing the hVIVO data, in addition to the existing genomic health data platform that we've put together. So that's a really exciting. Some of our investors say we could even spin that company off into a standalone company, but we want to keep it as part of Open Orphan. If that ever happened, every Open Orphan shareholder will be a shareholder in that. But that's a really, really exciting part of our business now, that not alone are we in the pharma services, we're in the pharma data supply business with a lot of AI tools built into it. The problem with both companies, the break-even point was much too high. I know people got concerned when you heard my approach to break-even point is bring it down, slash the cost base, slash the overheads. But you also have to increase revenues. We've done both, and so we're now in a wonderful position. Our break-even cost base is about 30% lower than where it was this time last year, and our revenues are substantially higher. So that translates into operational profitability. It's simple, but it amazes me sometimes how AIM-listed companies seem to forget this, that basically we're a straightforward company and you have to pass your break-even point before you're anywhere. Current trading has been absolutely fabulous. We're updating the market. Lots of contracts coming through. Let's say in the past 2 weeks, we've a Codigenics contract, which is not on the screen here, hasn't gone up yet. And Codigenics is the first in-human phase 1 contract. It's been done in our quarantine laboratory in London. It's a very significant contract. People are getting a bit upset why we're not putting the contract value in, but bear in mind we're the only people in the world doing COVID-19 trials. So there's natural sensitivity of not putting up because we want to quote the next party even more money. The Karna, that's out of Venn contract we announced in this last week. That's a new one and there's a follow-on. So the beauty about that is both sides of the business is trading, I would say, extremely well, and has us in very good shape for going forward for the rest of this year. I say the total focus on a monthly basis is new contract wins. And I know I repeat, some people are expecting a share price to double every week or two. We want to build a very steady share price rising on a quarterly basis. We don't want the share price popping 50% and then coming back down by 25 or 30. We'd like to see it steady growing. And we'll continue to announce contract wins. And I'm very confident and clear there is more contracts and there will be substantial in the weeks and months ahead. I'm not going to dwell too much in this. This is basically the pipeline. We've got pre-COVID, we've 110 million pipeline of non-COVID work. And then the bottom, the blue sky, this is really firming up. We've an even bigger pipeline of COVID work, and that's broken down to the COVID challenge studies. We're guiding the market between 35 to 70 million of COVID-19 challenge studies, and we've started in that. Third-party COVID laboratory testing, 5 to 10 million, and the rollout of antibodies in the coming years, somewhere between 10 and 30 million, with further upside. hVIVO Open Orphan has gone from a nobody knowing us to now basically with the coronavirus and with us being the only company in the world who said we're going to test vaccines in challenge study models for COVID-19, and it's got worldwide recognition. That is pretty useful because it delivers us volunteers. With 50,000 volunteers registered at flucamp.com. That's our website where we corral and organize our volunteer, because we need, like all clinical trials, we need volunteers to participate in them. Each volunteer gets paid on completion of the trial, £3,500 sterling for doing 2 weeks in the trial. And we've gone through thousands of volunteers of it, and there's never been an adverse reaction. And I say I'd draw your attention to the coming month or two, and I think you'll see some exciting update where we are with our COVID-19 challenge study trials, as they will be world news when they're announced. So a summary conclusion, we're a niche CRO, there's a clinical research organization. We're growing and expect to be profitable real soon. One could say we're currently. It's a high margin pharma services offering. If you're the world leader in a certain niche, such as challenge studies, you shouldn't underprice it. I think that was a problem in the past. We weren't the world leader and they were just selling it cheap. We have a broad customer base, which includes many global pharma companies, and we've basically virtually every large vaccine manufacturer in the world as our customers. We have unprecedented global pharma growth opportunities, and lab services taken off rather nicely. Share price movement, I think everybody's been watching that. I would say watch that space in the coming weeks and over the coming month, and I think people will be less worried by the time we speak again, hopefully in a month or two's time as regards, and that's how confident I am. We're going to sell off and get rid of some non-core assets. Say we don't want high risk, high reward products. That's Immutex. I draw your attention to BioNvax. It's got 500 million market cap. It's got one of the only other phase 3 ready and phase 3 universal flu vaccines. Immutex, we own 49% of it. Our friends at Seek Group own 51. So in other words, we put 100% of that into one of the plans. We put it into a listed NASDAQ company, and BioNvax is the closest we can see to that. We believe we have a better company because we've got both a universal flu vaccine and we've also a universal mosquito saliva vaccine. It works for both malaria, dengue fever, and a whole host of anything else in mosquito. With Prep Pharma, we'll also spin that off. These assets will either be all sold for cash and paid back a dividend by Christmas, or if we don't, we'll dual process. If Big Pharma doesn't come knocking and we don't get the right price, we'll IPO them and we'll do a dividend species. So again, all our shareholders will get a dividend species. So by Christmas, we're not giving you a dividend. You'll be getting a dividend species, which means by Christmas you have an open orphan share and you have a share in a NASDAQ listed vehicle. Monetizing, that's more than that. And in summary, what I want to say is in recent weeks, in the past month, we've announced quite a few contract wins. There's certainly more of those where they came from. We've guided the market, watch this space. We've also, in the past month, announced we acquired Chim Agents. That was basically a 6-person team. We've basically taken out our competition. There's only one other competitor in the world who's commercial challenge studies. That's a Swiss company, SGS. They only got a challenge studies because they took 2 of our employees 5-6 years ago. We've now taken them back, and that minimizes the competition. And because we're expanding so rapidly with the COVID-19 challenge, we need it. So that deal we announced where we acquired Chim Agents for a nominal sum, that was really a low-cost way of recruiting 6 to 7 critically useful people. So I think that gives a summary where we are. As you hear the tone of my voice, I'm always upbeat, but I think I've never been more upbeat than where I am today. I think if people are patient with us over the coming month or two, I've said numerous times in recent months, this company will be unrecognizable by Christmas, all in the positive sense. So I think on that note, I'll hand it back over
Okay, thank you very much indeed. We've had a huge amount of questions, and there are quite a few that are asking about or asking for commentary on what I would really kind of quite short-term kind of share price movement and people selling, people buying. Really, you can't really talk to that sort of thing, can you? That's the market. The market does what it does to some degree. Um, so I'm not going to try and get you to pinpoint the share price is going to go up on this date or go down on this date. I don't think it's really fair. Just want to kind of say to those people who've asked those questions, they're almost a not fair thing to ask someone to try and comment on, because it's kind of beyond what one can do. Is that reasonable, Cathal? Is that?
Well, I think I'm quite happy to bear in mind I'm originally a stockbroker and quite an active private investor. I think it's people have a right to ask, why is their share price moving up? Why is it moving down? It's kind of stuck in a trading range at the moment between 12 and 13. I think people are trading in that. They're waiting for transformational contracts. We were unable to put the price of the contract, the COVID-19 one last week. People would like to see a big figure in there, let them go and guess and work on it. I think over the coming weeks and months, you will see substantial contract wins and the figure on them. But I think, look, it is where it is. We have gone from 5.7p just over a year ago, and on an 18 months basis, Ven's share price was 1p. So you take it on an 18 months basis, we've gone from 1p to 13. That's not bad. And I would say, look, the beauty about it is we're not going to be loss making. We're going to award a lot more, sign a lot more contracts. And I think if people take a 3 months view, will be utterly changed. And we take a year-end view will be even more. So I think people bear with us. I know there's been lots of wonderful trading opportunities. There's been a great COVID bubble. We have not participated in that because we've got a very strong non-COVID business, but we also are availing of the whole COVID opportunities. And I think the real winners in COVID will be seen over the next 6 months as the vaccines are being announced and who's involved with the winners. And that's where the big shakeout, I think, will come in the COVID bubble, that people are expecting 5x. Danger about something going up 5x. It can also come down by as much. Hopefully that answers that, Roland, does it?
Yes, it does. Thank you. Thank you very much for that. And I appreciate that there's perhaps a seller in the market, and there's questions around when that seller is going to be out. And you know, I do appreciate investors want to know this. I'm just commenting that it can be very hard to answer something that's beyond maybe your ability to see. So if you don't mind, there's a lot of questions about Immutex and the timelines. Just again, clarify the timelines on that listing or sale, when you might hope that to be for.
Yeah, Roland, we've given ourselves a target around year end. All these things take a number of months. We've only put this Immutex asset up in the last 6 weeks. So I think give ourselves 6 months from 6 weeks ago. So that gives us around the turn of the year. It's an interesting asset. And I think it's a great time to be looking to monetize anything to do with influenza, anything to do with dengue fever, anything to do with malaria. So yeah, look, at the plan would be, we've set ourselves a target about 6 months to monetize this asset. It shouldn't be within hVIVO. It shouldn't be an open orphan. We're now a profitable pharma services company. These are high risk, high reward assets. And either we sell it for cash to big pharma. That would be probably a very nice route. Sometimes big pharma take a lot more than 6 months to make up their mind. So if they don't, we'll go ahead and we'll do something we can do, and we'll put it into another company and monetize it that way, i.e. preferably a NASDAQ listed SPAC, i.e. that'll be a vehicle with cash, and then they can monetize it. And one way or the other, the individual open orphan shareholders will get a share in that, either a dividend or dividend species.
And the kind of the next major theme has been around profitability, and I think you've probably said it, but again, just to be really clear, are you now profitable as we sit here today? Or if not, can you give some guidance as to when you would expect to be?
Yeah, I think it's clear with the contract wins we are. Okay, that's all I should say. I think officially we've made it clear in the second half of the year, with 6 offices got rid of. We've let a lot of our French staff go, the ClinOps team. We've shut the Dublin office, so we're down now to 3 offices. So yeah, so look, I am much more relaxed. This business now is no longer a loss-making business.
Questions around antibody testing, and has there been, or Any impact on the announcements in the media about the 90-minute tests, kind of the government initiatives around that? Does that have any impact on what you do?
No, I think, look, we've guided the market from day one. We are a laboratory testing company, and we didn't want to go out and just pile in purely to antibody testing. We didn't want to do it at B2C, you know, B2C, business to consumer. We wanted to target B2B because we're dealing with large companies every day of the week, as pharma companies we deal with. So we're targeting the large employer groups, and we're providing them with both antibody testing, but more importantly, we're also providing them with PCR-I COVID testing. The large employer groups are not able to go to the NHS, are not able to go to the government and say, please test all our staff on a regular basis. So that's the niche we're targeting. There's other players doing it, but we're happy to say that's a nice, steady, growing business. It's not the ultimate business. The ultimate business, we want to be a niche CRO, clinical research organization. Our focus is on the challenge studies, but absolutely, look, the antibody is a great place to be. We've always said, is it 6 months? Is it 9 months? Is it 12-month business? We don't know. But yes, it's steadily growing. And yeah, we're happy to be there. But we're really giving both antibody testing and PCR testing to a number of the large employer groups.
A question here, one of the risks for open orphan could be an adverse reaction or even a fatality during COVID testing, or I guess any testing. What would, how can an investor be confident it will not happen, or could you talk to that a little bit, please?
Yeah, look, to get the COVID testing underway, to be honest with you, I decided to get all the staff happy. I was going to be volunteer number one. I decided that if we were going to ask volunteers, if the executive chairman wasn't prepared to do it, nobody else should do it. And I got approved to be volunteer number one. However, the protocols have changed. I'm 55. And they've now moved them down. The COVID testing must be between 18 and 30. The general concept is people between 18 and 30 have not quite immunity, but there's been very few adverse reactions, very few. HVIVO has been doing this for 20 odd years, pre-incarnation, about 30 odd years. We'll be very, very, very careful. We are fully insured. If there happen to be, God forbid, a fatality or an adverse reaction, it'll be done in a setting close to a hospital. And our belief is there's not going to be an adverse reaction. We're going to be very, very careful. How you test a vaccine is called a characterization study. You test before you give it to them in tiny microscopic amounts, and you build it up over days and weeks to see what level of a virus. And bear in mind, it won't be the pure wild type. It'll be a attenuated virus. That means we'll brought out some of the nasties. It'll look and act like the wild one, but we won't be given the vaccine or the virus that has potentially killed people. It will be a modified version. So we're very happy and confident. Myself as a larger shareholder, that's not something that wakes me up at night at all. And I'm still, I've made it clear, I'm very happy to be one of the first volunteers to try that challenge study. Bear in mind, and this is me diverting slightly, that if we're in the community, if we get COVID-19, it's usually 2 weeks and you have a full viral load before you know you have it. If you're going to have an adverse reaction, you'll know you're in trouble. If you get it in the clinic setting, you get it day one, you're watched 24/7 by doctors, and we have rescue remedies. Everything we do, we have rescue remedies. So it can be monoclonal antibodies, it can be antivirals, retrovirals. So in the clinic, you get it day one, and you get a rescue remedy within a day or two. The minute there's infectivity shown, i.e., is it working or is it not against the vaccine, you get rescue remedies. So that's where most people don't understand. A challenge study, you have rescue remedies. You just don't let the reaction run wild. Hopefully that answers your question, Roland.
Thank you. We've got time for one more, and forgive my pronunciation. Had a couple of people ask about Prep Biopharma. And any progress with a Chinese pharmaceutical company or any other interest in that. Could you talk about that, please?
Yeah, look, Prep Biopharma, again, we end up owning 62.6. This is where some of Neil Woodford's 113 million was spent developing this company. It's a viral prophylactic. It's actually today the API, that's the active ingredient, is already licensed and used in China in a different indication. It has definitely utility against COVID-19. Again, it's one of these assets that we're just guiding the market. It's Immutex is where my money is on, if you ask me. Prep, biopharma, look, we're not sure, being honest with you, but the plan would be, could we push it into some other vehicle or get something? It's non-core, we shouldn't have it, and let's see where that goes. There is certainly Chinese interest, but my preference is, can we sell it or can we push it into another vehicle?
Okay. Thank you very much indeed for your presentation and answering the questions for us this evening, Cathal.
And thank everybody for taking the time to listen to it.